And good afternoon. Welcome to Market Talk for Tuesday, March 23rd. Happy National Ag Day to you and yours. Thank you for tuning in with us here. MarketTalkAg.com is our home on the web. You can find us there, Facebook, Twitter, Instagram, all of our streaming sources, and much more. It's all online at MarketTalkAg.com. Our great radio affiliates listed there as well. And again, thank you for tuning in here during National Ag Day. A peculiar market trade today, but mostly favorable. Let's talk all about it. Let's bring in our good friend Bill Biedermann with agmarket.net. And Bill, good afternoon to you and a happy National Ag Day to you, sir.
Yeah, you too. What a great day, huh?
Definitely a great day. You know, we should always celebrate agriculture every day, but I know we put an extra highlight on it today. And, taking a look at this market trade here today, I'm kind of interested here. We saw a big drop in crude oil again today, yet bean oil pushing new contract highs. And for the most part, grains, livestock finishing up higher here on Tuesday. What do you make of that with that big drop in crude oil? It's almost like the opposite of what we saw last Thursday.
Well, I actually expected us to sell off today when I saw the emotion of that market. But, we had another cash trade that was over 500 the board in bean oil yesterday. And of course, we've had two or three. I think that'll be the fourth trade now at a plus 500 over, telling us that, there's an issue in the bean oil. There really is. The crushers are crushing for oil, which means there's a little bit extra meal out there. Meal's trading sub 400, but there's definitely a problem. And looking out into the June through August period, the real question will be, how do we source soybeans to the crushers? Is it going to be a basis play or is it going to be a board play? But it's going to take higher prices to get soybeans in hand.
And I think that's a great point. We look at this market overall and we got, a few different milestones up ahead. I know prospective plantings is one of them, but when you look at this market and just the continued tightening of soybeans, it almost seems like we need those higher prices. We need to find a way to ration demand because at this rate, we could run out of soybeans.
Well, Jesse, right now, USDA is at 120 carryover. We're at 114. But reality is, if you stop your demand pace right this second, you're going to be about a minimum of 60 up to 80 million bushel drawdown from the 140, which puts you well below pipeline. I mean, you got to have about 100 just to keep the trains and trucks full and the pipeline going. And that's only been tested one time, and we got down to a 90 million stocks, and the market had to do a real job of rationing.
Well, we take a look at this market trade, and if I'm a producer, I'm getting ready for spring planting, and obviously going to be spending a lot of time in the field. But with the way this market is setting up as we head into this prospective plantings report, do you have any advice for them? Should they get some strategies in place, lock in a floor? Should they wait a little bit if they've made some sales already on new crop? I mean, what are some thoughts you have for our producers here the next couple of weeks?
Well, this is one of the most volatile reports of the year, and this year will be no exception. I mean, if we have the type of stocks report that we expect, it'll show less inventories out there than what we think. That'll be very bullish yield crop. Now, on the other hand, how many acres are we going to plant? I mean, we all know that this is the most profitable year we've seen in years, and we all know everybody's going to take advantage of that and plant their neighbor's front yard when they're sleeping. So, it's going to be a tough one. Personally, I think that the way the spreads have traded in the last 2 weeks and the way we've gone to certain price levels, I think we've factored in a lot of the surprise. So I think the real surprise could be a surprise of the surprise, right? So it's a bullish report. We jab higher, and if we close soft, I'd be a seller for sure. Absolutely. But going into this report, it's a good idea to have stuff sold. And what we've done is we've recommended making sales and then purchasing some call strategies against that are cheap. You're still in the game if it goes up. And if you're not comfortable with doing that, because some guys aren't comfortable selling cash because they don't know what their yield will be, get some puts bought. And you can buy short dated puts. You don't need to spend 40 cents. You can spend 15 or 10.
And I think that's a great point you mentioned there with short dated puts. And I know some producers aren't necessarily familiar with that, but buying a short dated put option or a short dated call option, if that's the case or whatnot, or whatever they're looking at, those are out there and can be kind of attractive, especially in a volatile market like this. Like you said, if you don't want to spend the 40 cents for a put, you only want to spend 15. Can you maybe talk a little bit about that for producers who might not understand it? Can you give us a
Yeah,
short
absolutely.
version?
So like we're trading at 14.21 right now. I can go to a 14.10 short dated put, which means it's all based on the May contract where it's trading, but it expires on April 1st, which is the day after the report. So it allows you to get through the report. Well, because it's so short dated, it doesn't cost a lot. I mean, I can do a 410 put, which is right where we're trading basically for 14 cents. If I'm afraid to spend 14 cents when we're trading at 14 plus dollars, I need a psychologist because that's cheap insurance.
That is very cheap insurance. I love the analysis there. No, it's very true. And looking overall at all of these markets, whether it's corn, soybeans, I know wheat has seen some pressure with getting beneficial rains in the plains, but wheat having a nice day on Tuesday as well. And obviously, cotton, milo, sorghum, you throw all of these crops in there that are fighting for acreage. I would almost say that this is probably the most volatile report we've seen for prospective plantings in quite some time, not just for just the last couple of months, Bill.
Yeah, if we come in like we're at 92.75 on corn. We were at 92. We bumped it up just a little bit because of the recent rally we've had. And I think 93 would be max. And I think that's about the max that we can physically get out of what's in PP and set aside and everything else. So the reality is this. Let's just say it comes out at 92 or less. I think that's friendly. I really do. I think it has to be above 92 to even be remotely bearish. With 92.7, we're keeping our carryover down around, I don't want to spill any beans here yet, but I'm guessing it'll be, hard to get over 1.6. Okay. If we look at the soybean acreage, most people, if they're at 92, they're like a 89 or an 88 or something like that on the beans. We're at 91.1. So we've brought in all but 1.6 million acres that's out there. We've taken everything back into the growing pot. And we've only set aside 1.6, which is historically very low. We've got a 91.1. If you have a 49, I'm just punching this in while we're talking, a 49.5 yield, you're still only at 134 carryover. So we've got to have a 50 plus yield and 91.1 million acres to be bearish. And that's going to be hard to do. I think the record, we're looking at 92, that'd be 93, a little over 103 million acres. So that's at the top end of historical corn and bean acres. I think 102 is.
Yeah, definitely a very tight situation, and it's when you just do the math, that's great that you brought that up because that math is it's very important to actually sit and look at those numbers and not just guess about it, but look at what it's actually going to take. Bill Biedermann, our guest today here on Market Talk. Bill, let's shift our conversation to livestock. A fairly decent rebound in the hog market today after Monday. We started lower. We actually had a decent rebound Monday afternoon going into the close, and now today we popped this thing back higher. What do you make of this hog market right now and some of the fundamentals that are trading in this market?
Well, I've been impressed with the weekly export numbers going back for the last 4 weeks. I mean, we've seen China a good buyer. We've seen Europe a good buyer, both beef and pork. And I think so from the demand side, we're going to have just a massive export number at the end of the year. Number two, I think that there's, and I can't confirm this, but just talking to one of the breeders I talked to, they believe that there's a lot of stock being shipped to China to aid their herd rebuild. And if they stay on track, Jesse, we're hearing they'll be over 100% of where they'll be in 2017. I've heard estimates as much as 104% in herd growth. That's a huge amount. That's pretty darn bullish right now for any kind of an animal, whether it's on the hoof or hanging. It doesn't matter. And because it's a drawdown of what's available for meat production until their herd size is at a marketable point, which you're talking about mid 2022.
Well, and obviously, we're watching demand with COVID vaccinations and people getting out to restaurants, but also, on the pork side, African swine fever in China, we're still getting more nuggets about the impact of that, and hearing about maybe some PRRS in parts of the Midwest here in the U.S. But I'm with you overall. It just seems like that demand side is steadily picking up and continuing to grow, and is really been a big driver in this hog market here. And you look at the cutout values and things like that. I mean, continuing to be strong, Bill.
Yeah, they really are. I mean, we're making money, cutting meat, both pork and beef, and they're going to keep cutting as much as they can. We still got a little bit of tonnage to work through, but I think we're going to get through it here in the next few weeks. And then, like you say, it's starting to warm up, and people are feeling much better about the risks of COVID. And, hey, I can tell you our neighborhood's getting together. It isn't stopping them, and they're cooking out already because it's warm down here.
Yeah, very, very true. And on the beef side, it's kind of the same story, but we're looking at good numbers again today. And I know the box beef cutouts were up nicely here. Cash country still kind of seems to be the one factor in cattle right now that we're watching. Just can't seem to break out of this sideways range that we've been in for 2 months, over 2 months now.
Yeah.
Do you see us breaking out of that range and getting some higher prices in feedlot country anytime soon, Bill?
Yeah, we think it's going to take a couple weeks, but we're looking for a 120 cash trade, maybe, probably, maybe this week. I don't know, maybe next week. But we are expecting the cash market to pick up. But we're really wanting the cash to start leading the board. That would be a really exciting thing to see. I think that would be very friendly, because that would tell you that we've cleaned things up. These packers are reaching out. They want to make all the money they can while it's on the table. And that would really scoop up the whole pipeline. And then once it's there, in that situation, it's going to stay relatively tight all the way into the summer demand.
Well, I know one thing too, some folks have pointed out to me is that spread between hogs and cattle on the futures board. It keeps tightening. Hogs keep catching up to cattle here ever so slowly. And one has to wonder if they'll get closer yet and then both take off to the high side. I think that's an interesting thing to watch too.
Yeah. I mean, we got to be careful too. I mean, we can't let economics are pretty simple. The higher the price, usually the more the production and the slower the demand. Obviously in meat, it's going to be slower demand to be watching for first. But I really believe that through this COVID thing, it's been a big, big plus for ag, because it's taught people how to eat at home, and they love having company and they love cooking a lot. And now the restaurants are opening up. That's going to be a whole nother surge. You're just going to have total consumption at a higher level than we've ever seen before. And I think the only thing that's going to wreck it, honestly, would be a wreck, a black swan. Hey, we're doubling taxes on everything. And, just activity economically falls into the horse trough, that kind of a thing. I don't see that in the near future. I mean, that's a minimum of a year away.
Sure. Bill, any other final thoughts you have for us today? I know we covered some good topics in a short amount of time here. We have a little bit of time left, but looking at today, a fairly decent close here for all of the ags today. Crude oil was that outlier that's down hard. Any outside macro things, financial things that we need to watch with the market, or any other thoughts in general?
Right. Well, I hate to say that the party's over in Washington with Treasury Secretary Yellen, but she is not a real friendly person towards inflation. So the dollar has been reacting to that new administrative position. If the dollar continues to strengthen and get over 92.5, 93, then I think that takes a little bit of the wind out of the sail. Another thing that we need to watch for is that seasonally speaking, we could be peaking out here in the short run. I'm hoping for a bullish report, get a big jab, but if you see a weak close, I'd be selling that, because from a seasonal standpoint, you get this rally right now because of all these bullish things, and then all of a sudden the farmers get in the field and they plant, and almost every year you have a, dang it, they got it planted again, sell-off. And that sell-off would be the one to buy going into summer weather.
Well, Bill, a lot of great insight as always. I know producers, if they need some help, they can reach out to you and the team there at agmarket.net on the website, and give you guys a call and check out your app as well. You guys got a lot of great information.
Thank you, Jesse.
Yeah, definitely check it all out. Agmarket.net. Bill, again, Biedermann joining us here today for Market Talk. We appreciate the time as always. That's going to be our Tuesday edition of the show. You find us online, markettalkag.com. I'm Jesse Allen, wishing you a great afternoon.